As we get into a period where growth is harder to come by for tech stocks, I think you have to look towards these staples that people need. Like one of my favorites is GSK. Right now, GlaxoSmithKline, it's been crushed. But it pays a great dividend. And what are people going to stop taking their blood pressure medication in a recession? No, you still have to take it. So I think you look for pharmaceuticals, I saw Amgen on that list. Those type of names still have that. And again, it's not to say they won't go down, but it's about what will perform the best. I think you're going to see it coming better than expected, so meaning lower than expected.
Okay.
I do worry, like I said, is that they're aggressively hiking, and it takes. We've seen the stats. You've seen the stats. It takes a certain amount of months for every rate hike to filter into the economy. So the question is, if you've done 3 already, and let's say they do another one in the beginning of November, when do we actually see that impact? So it's almost like you're raising by 3% on the Fed funds rate, and we may not have even seen that hit the economy yet. Obviously you've seen it hit housing, right? 7% mortgage rates. Think about housing, how fast that's coming down. I'm seeing it in Florida everywhere, how people are pulling out of deals. Number one, we've heard about Credit Suisse, right? There was rumors just a couple weeks ago or a week ago about Credit Suisse having issues. And the thing is that, the Fed has enabled the financial sector to do a lot of the same things they did in the last financial crisis, right? It's almost like no one's learning from the rules. Even Dodd-Frank kind of got pushed under the rug a little bit. And that just, so it's like the short term, everyone's just focused on how can we be the most robust economy in the short term. Well, guess what? Eventually that breaks, and that is an issue for sure. So the Fed isn't gonna, so there's two things. Everyone thinks a pivot is where they start dropping rates. Yeah. My pivot is where they go from 75 to 50. So it's like the downsloping mountain versus the upsloping climb.
I'm talking about just straight up stopping raising rates.
So just going to neutral. I do think by 2023, early first quarter, they're done. And I think you're going to see the jobs numbers. At some point, these jobs numbers are going to crack, and we're going to see a big drop and a fast drop. And again, this is going to coincide with people running out of this COVID savings and all of a sudden really pulling back. And think about 401ks. Think about your house. Like, as we see the housing prices fall, and we're starting to see that now, the wealth effect disappears. And people feel like it's one thing to say, I'm going to go buy a new car because my house just went up 100K in the last 3 months, and you know what, the economy's rocking. But now all of a sudden your house drops 100, 200,000, and you have other factors that are pulling you back. Now you just put on the brakes and the cliff dive occurs. But if things get bad enough, but I would be surprised. I would be surprised if it gets that bad that quickly. Yes, I'm talking cliff dive, but I think with inflation, and I don't expect inflation to go back to 2% anytime soon. We're talking years above 2%. So they're going to be very reluctant, and this is going to be another point where we're going to all say the Fed was late again, just like they said it was transitory, it wasn't transitory, just like they said So they're always late, and then they always overdo it. We're seeing it right now. They were late about inflation because they thought it was transitory. Now they're hiking ridiculously. The same thing is going to come in. They're going to wait too long to lower rates and start stimulating, and then we're going to get into a much worse situation, and they'll have to drop rates and print even more money. Look at the balance sheet, by the way. Fed's balance sheet, it goes like this. It goes up sharply, and then they try to bring it back down. It goes down a little, and then up sharply again and down. That's the way the Fed works, unfortunately, because they're human, number one, and number two, sometimes, honestly, I don't know what the hell they're thinking. Sorry to say it, but so my guess is it will signal a major bounce. But again, like I said before, stock market to me, 5-10 years before we make a new all-time high. But you know what it's gonna put a bottom in, and there's gonna be a new bull market. Bitcoin and gold will outperform, absolutely. As soon as you get a pivot, gold is gonna rip because the dollar will fall. Yeah. And Bitcoin still has some downside because it's still a risk asset, but down the line in like a year, I do expect a major bottom in Bitcoin.
Hold up, so are you saying the NASDAQ is gonna stay flat for 10 years as well?
So not flat, let's be clear on this, not making new all-time highs.
No new all-time highs.
So think about the .com, right? It took 15 years to make new all-time highs on the NASDAQ. Yeah. If you look at the Brazilian market, if you look at the Hang Seng, both those markets made their highs in 2003, and they have never taken out those highs, but you've still had mini bull markets in there with huge moves to the upside.
But wouldn't that mean that Bitcoin isn't going to make new all-time highs because it's been correlated with the stock market?
Yeah, you would think that it wouldn't make new all-time highs, but I actually think that there will be a pivot in Bitcoin as it matures, as regulation helps people feel more confident, institutions feel more confident. You're going to start to see it being treated much more like gold, which will then
it's going to start diverging from the stocks.
It will, not yet. I want to be clear to everyone out there. It's still going to take some time, but there will be probably in about 12 months a divergence that begins.
So 6K was your last downside. What are you sticking to that?
So first support is 12 to 13,000. I think in the near term, we're going to see a little bit of a bounce, then a wave down to 12 to 13. And then I do worry that you're going sub 10 to 8, maybe even worst case scenario, 3,500. 3,500, very small percentage, but that would be the equivalent of Amazon.com's collapse in the .com era if it were to equal that. Gold, I'm still a huge bull on gold. Remember, dollar's up 20% this year. Gold at the lowest was down 7%. If it's the correlation with gold and the dollar should have meant gold was down 20% when the dollar was up 20%. So the fact that it's only down 7 or now only down 5 or so, it tells me that big money's buying gold. That means it's going up. I'm a buyer of gold.